What's going on, boys? It's Meyer here, and today I'm just going to run you guys down from A to Z on what I did to make $200 today in literally less than, I would say, 2 minutes. So let's jump right into the video. Alright, so we got the SPY chart up on replay mode, and essentially SPY is kind of the only thing I trade. It's I just keep it simple. Trade SPY, it's the overall market. There's really good moves on it. So let me show you what I did from A to Z on how I made this much money in under 5 minutes, I would say. So SPY, the yellow zone is pre-market, and so what happened was we just quickly analyzed pre-market. Okay, right over here, let's go back a couple candles. So right over here is 6 o'clock, and these are 15-minute candles, so each candle represents 15 minutes. The higher the time frame, the more reliable the like movements and setups. So all we did today was, I'll quickly write it down. We waited. So we waited for key levels during pre-market. That we can identify and play our trades based off of that. So what we see right now, SPY in pre-market, it's in an uptrend. Okay, I can see we got a swing low down over here, swing high, swing low, and then swing high right over here. This was right before market open. Okay, so we can see that SPY uptrend. Okay, and we identified this 458 zone as a key level. All right, and if we switch it to the daily, seeing what the daily is doing as well, we would notice that this 458 level was a big key level in the markets. On the dailies, I normally like to have my lines red, but 458 on the daily, we can see that in the past we've tested it once, 2 times, 3, 4 times. Okay, so I knew this was a key level. Even over here, we rejected right over here. We rejected it and came down. All right, so I knew that 458 was a really big key level. All right, so what I like to do is come back to my 15-minute. We can get rid of all of this. Okay, and what I love to do is draw zones. All right, so I had the 458 zone, this top right here, and I aligned it with the top wick of the 458 candle and the body, the first body of the most recent candle over here. I like to paint these red as my sell zones, and what I also like to do is just drag it along, see where else we've hit 458. This is on the 15 again, and we can see even on the 15-minute chart we had a price break below the 458, consolidate around it, break below, test it, break down, and then kind of respect it right over here before it completely broke down on it. So what I did was I saw that 458 level, market opened. All right, market opened right over here. Let's go back a bit more. All right, let's go down to the 5-minute. So this is what happened. Market opens, pretty volatile open. I knew I didn't want to get in until I saw the reaction of the 458 level. Like I said, always react, do not predict. I saw the 458 level. I saw we had 1 wick. Okay, that's setting up for good. That's a good setup right there. I continued to wait. I saw a 2nd wick, and I was convinced. Okay, I took a short position, probably at the bottom of the zone. I did chase my entry a little bit. I took a short position on the bottom of the zone, and I placed my stop loss up above this wick, and I made sure to have it above the zone as well. I set my target. I had it. My original target was 456.50 zone, right over here. We can see that price had tested it multiple times down here. We had one test here, another test here, three tests. So this was validating my point for holding my position to down here. But what I did was, because it was the open, I was a little bit sketched out, and I just kind of held for a smaller move, which I should have held for a bigger move down till over here. But what happened was I set my target at 457.30 area, and I watched the trade play out. Yeah, as you can see, we had a huge drop, okay? And why that drop happened was because if we look at NASDAQ, but before we go to NASDAQ, let's just analyze this trade. Of course, I should have held to my targets. That was one mistake, okay, that I made, was that I did not hold to my targets. If I held to my target, this $200 trade would have been 700, 800, I would say. I did not hold to my targets. We also had the opening print marked down right over here. That's a nice opening print candle. So I had a feeling price was going to come up and test it over here. But unfortunately, I had to leave the computer for other reasons. But yeah, I was not here for this retest up here, which I'll show you what happened. SPY came back up and retested that opening print, and then consolidated a little, tested it second time, and came back down. So as you can see from this price action, we had one test open at the one wick open, test that high. We had basically a triple top if we count the opening wick. So 1, 2, 3, and then came back down. That would have been a much more confident trade setup, but I did decide just to take it at the open. And so yes, just this tiny move over here from 458 down till 457.22 made me $210, which was a really good trade. But obviously I should have held down till here. I was trading SPX cons, so they were extremely volatile. And yeah, so this is right over here. And how I could have predicted that it was going to be a short day was NASDAQ. When we look at NASDAQ from Tuesday, all right, so when we look at the NASDAQ, I had the hourly pulled up. Hourly is a big level, big time frame to find your key levels on the hourly. And let's take this back to just Monday. So when we look at NASDAQ, I traded NASDAQ at, sorry, I did not trade NASDAQ. I traded SPY at 6:30 in the morning, Pacific time. And when we look at NAS, we saw that it broke above this range over here, came back, tested it, went up, came back, tested it again, respected it multiple times, came back up, tested it somewhat over here, and kind of wicked over here. So I knew that this zone over here was an area of interest. So what I waited for was, and then we had this test over here on Thursday, and then we had this one over here and one over here. And so what I waited for was just to see what NASDAQ was going to do, because SPY moves with NASDAQ. They're all the same thing. They both move together. So I traded SPY when it was around over here, this big white candle. And if we look at the 15-minute on Monday, so we had this test here, this test here. We had SPY open up on Monday at 6:30, shot up, okay, and at 6:45. This just decided to wick, and NASDAQ had a huge red candle, okay, or a white candle is what I would mark it down as, but it just came down insanely big, huge white candle, which pushed SPY, and so it would have been a good sign to get out at the bottom of this candle over here, because immediately NASDAQ just decided to retrace and bounce back up. For you to have held that position, you would have wanted it to break past this zone over here. There's two wicks down here, which makes it pretty reliable. A couple more over here. You would have wanted to wait for NASDAQ to break below there if you wanted to, if it was a smart move to hold that position. I didn't want to hold though, because it was the open, and open is always really sketchy. So the more confident trade would have basically been this one over here with SPY. So not NASDAQ, but just corresponding the two. This would have been a better trade, because then you could have held during the downtrend and made that same money, same position. but I took a bit more of a riskier trade, which resulted in me in not holding that much. Nasdaq tested this one up over here and just came back down and immediately bounced up, so I knew that I did get out a bit earlier, but it is what it is. There's nothing you can do. It's the game. It's the name of the position. It's the name of the game when it comes to trading. So yes, hopefully you guys found this video informal, and yeah, I'm pleased to show you more trades, and yes, just go through what I went through. All right, I will see you guys later.